In business news, Vice President Senator Kashim Shettima is employing African leaders to work towards ramping up the total $3.1 trillion gross domestic product of countries on the continent, amounting to 3% of the overall global GDP. According to the Vice President, the total gross domestic product of African countries taken together is barely $3.1 trillion, which is less than 3% of the world's GDP. The VP gave the charge during the African Economy of Scale plenary on the sidelines of the ongoing World Economic Forum in Davos, Switzerland, and regretted that African trade was still hovering around 3% of the world trade. In his brief remarks, the Vice President told African leaders that economies of scale portend the ability to do more by coming together and form a more formidable unit with a bigger voice and stronger negotiation abilities. An expert has expressed optimism about the growth prospects of Africa's economy in 2024, according to senior economist at STIRS, Mrs. Dumebi Oduwole. While speaking on our flagship business program earlier today, Business Nigeria, the outlook for African continent looks bright, having survived the instability witnessed in 2023. She spoke on the background of the 2024 African Economic Outlook report recently released by STIRS.
So for starters, Africa's growth, we're projecting a growth rate just still alongside what the IMF is projecting and what the African Development Bank is projecting. Okay. So Africa's growth rate is projected around 3 to 4%. Yep. And this growth rate projection is actually centered around the growth across the continent. So we try not to look at Africa as a country, okay, ensuring that we take into considerations the uniqueness and the various characteristics and also policy interventions in various other economies and how that feeds into Africa's growth. So starting from like 2023, where the global economy did face a turbulent period from global monetary tightening, inflationary pressures. Yeah. All of this fed into Africa's economies and then fed into the entire outlook for the region. So that's why our outlook for Africa is quite conservative, though still optimistic.
Stakeholders have called on government at all levels to stop corporations from exploiting workers, evading taxes, and creating a harmful environment in the pursuit of massive profits. The stakeholders believe these measures will help reduce inequality and pave way for a more equitable and sustainable global economy. Uloma Onyemachi reports.
In the world economy, a major issue highlighted in the 2024 economic report is monopoly of the market. This imbalance paints a stark picture of the rich getting richer and the poor getting poorer. According to the report, almost 5 billion people worldwide have become poorer since 2020, projecting that if things continue at the current pace, it will take 230 years to eliminate poverty. This revelation serves as a clear call to action, urging governments and key players to address this inequality.
Globally, the world's 5 richest men have more than doubled their fortunes from $405 billion US to $860 billion US since 2020, at a rate of $40 million per hour. I mean, these 5 men, they are more or less, earning $40 million an hour.
The absence of proper taxation system in the country is also one of the very reasons why government is losing a lot of money.
Stakeholders insist the Nigerian government needs to intensify its effort against corruption.
So there's no way you can address poverty and inequality with that kind of mismanagement of governance in Nigeria. So we must sanitize electoral process because we are under democracy.
If inequality persists, what we would have is anarchy. Today, the Nigerian people cannot enjoy service delivery or social amenities. Over 5 trillion naira was given as tax heaven. This is unacceptable.
Kidnapping has become a business in our country. We are all witnesses to it. And the duty bearers are doing little to check it because somehow it still trickles back.
Highlight of the event was the unveiling of the executive summary on the 2024 World Economic Report. Still on boosting the economy across the world, Nigeria's Vice President Kashim Shettima is currently in Davos, Switzerland, to engage with global leaders on socio-economic issues, which is why public discourse and engagement such as this is very vital to highlight the need to tackle inequality and alleviate poverty across the world. Uloma Oyemachi, TVC News, Abuja.
The current bullish run at the stock market has been linked to early positioning of investment baskets along government's reform policies in the financial markets. Effiong Gekop has detailed reports on markets.
The stock market has demonstrated a strong relationship between government policy reforms and sustainable investments. In an interview with TVC News, the acting CEO of the Nigerian Exchange Limited, Mr. Jude Chemeka, explained that clear market issues touching Forex rules and regulations directly influence the pattern of investments at the exchange.
Market itself is usually driven by a demand and supply sentiment, performance of the company, and then all the various elements of market hearsay. So the market for a long time was grossly undervalued, but because of all the reforms, we're beginning to see investors take interest in the market. And if you look at where the interest rates are and the rates of inflation, it does make sense to be invested in the capital market, especially on the equity side, to be able to hedge against all those sort of inflations.
While commending government incentives for the capital market, the NGX boss stressed the need for growth of the entire economy for overall development.
The exchange, we're constantly creating products, so we're looking to launch our single stock features, which is really an avenue for investors who feel that stock prices are overvalued to be able to hedge. And so to avoid all the usual massacre of a one-sided market, that product will really help to moderate the volatility that usually comes after a run-up that we have seen.
Equities trader Mr. Charles Fagroka warns that the market may apply brakes anytime on price jumps. He counseled mixed portfolios to achieve balanced growth and good earnings on investments.
The market has its own behavior, and it is because it is a market on its own. However, it's not operating in isolation, but I am trying to advise investors generally, always plan your trade and trade your plan. That is the only way you can, ride on this volatility, because the market cannot continue to go up and up and up and up.
Meanwhile, equities prices stayed tops following good outings by Bua Cement, Dangote Cement, Dangote Sugar, and MTN Nigeria. Over 1 billion units of securities were crossed in the market with a pointed value of 19.2 billion naira, showing strong interest in market activities. Many of the low traders with losses were the banks. Effiong Gekop, TVC News, Lagos.
Outside our shores, Asian shares struggle to make headway, weighed down by murky economic outlook in China and expectations the global rates easing cycle may not come as early as some had initially thought. Chinese stocks plumbed multi-year lows as the dull mood over China's shaky economic recovery extended into the second day, while an escalation of geopolitical tension also kept markets on edge. MSCI's broadest index of Asian Pacific shares outside of Japan opened a new tab and rose 0.3%, was still languishing near Wednesday's 2-month low of 490.45 points. The downbeat mood looks set to continue in Europe, with Eurostock 50 features dipping 0.02% and FTSE features down 0.08%. Meanwhile, Nasdaq features gained 0.06%. Chinese blue chip stock index opened a new tab, tumbled to a 5-year low of 3,171.63 points, while the Shanghai Composite Index opened a new tab, likewise bottomed at 2,760.98 points, its weakest since April 2020. Google CEO Mr. Sundar Pichai told employees to expect more job cuts at the Alphabet-owned company this year. According to the report, Pichai said in a memo that the layoffs this year were focused on removing layers to simplify execution and drive velocity in some areas. The move adds to a sign that job cuts will continue this year as companies look to adopt artificial intelligence software and automation to lighten workloads. Last week, Google said it will lay off several employees in its voice assistant unit, hardware teams responsible for Pixel, Nest, and Fitbit's advert sales teams, as well as its augmented reality team. Crude oil prices rose today as OPEC forecasts relatively strong growth in global oil demand over the next 2 years, while the market also eyed disrupted U.S. oil production amid a cold blast in tensions in the Middle East. U.S. West Texas Intermediate crude rose to sell at $73.06 per barrel, with a surge of 0.69%. Brent crude futures experienced an upward price review of 0.40% to sell at $78.19. Bonnie Light recorded a decline of 0.79%, selling at $78.01. And for the OPEC basket, crude dealers are offering $79.16, with a decline of 0.01%.